diving into our introduction, we've got a couple points to see here. Well, according to the IRS, a gift is defined as any transfer of property, including money, or the use of income producing property made voluntarily and without receiving anything of equal value in return. It's not like you have to memorize this definition. You'll just kind of start to see examples as we run through. In general, the donor, which is the person making the gift, is responsible for paying any applicable gift tax on the transfer. Great way to think about this, help remember it, as I kind of do throughout all our lessons here, is that I kind of give you my take on how I think about it. Well, with gift tax, the donor is generally the one who has this planned. They're saying, hey, it's a grandparent, I'm going to give my kid $30,000 or give the grandkid $30,000, right? I mean, shouldn't we all be so lucky? But with that, the recipient, they didn't really plan for that. Yeah, I mean, yeah, they're getting a benefit. They're getting $30,000. Good for them. Very happy for them. But they didn't plan for that. So why should they have to pay the tax on that gift? They didn't expect to. They probably didn't pay enough to the IRS to offset that. That's just kind of my take on it. I mean, that's completely my rationale. So take it as you will. But that's kind of how I remember the fact that 9 times out of 10, 99 out of 100, like very super slight exceptions. But yeah, you're not going to end up paying anything as the recipient. Now we've got things such as trusts and estates where, yeah, the recipient's going to have to pay tax on a lot of that because it was planned out. Trusts especially, if you know a trust exists, well, you know you're going to be receiving money from it. It's not like someone just made a random gift. And I know it's a super broad generalization, but that's just how I remember it, so maybe that'll help you as well. Now, gifts can be made to individuals or organizations, but the tax implications may vary depending on the recipient and the value of the gift. Now, for example, gifts to qualifying charities may be tax deductible for the donor, while gifts to individuals are generally going to be not tax deductible.
Hey there! Are you ready to not only pass your CPA exams, but truly understand and enjoy the material while studying? I know it seems impossible, right? Especially to enjoy the material? We'll do it together. Tap into the power of CPA.examprep.ai, where we've got personalized quizzes, multiple choice questions, memorization guides, flashcards, simulations, all tailored to your learning. Our adaptive study planning puts you on the fastest path to success and lifts you back up if you fall behind. Avoid wasting your precious time and money attempting an exam with a low chance of passing, because who wants that? We want to get you through this process as quick as possible. Our exam readiness prediction lets you walk in with confidence, knowing that you're prepared for success on exam day. Thankfully, there's no payment method needed to get started, so why don't you come join us? Visit cpa.examprep.ai and let's achieve your exam success together.